Thank you very much for coming on to this webinar. And what we're going to cover today is we have a look at placing trades. Like I always do on at the start of every webinar, I'll take you back and refresh your memory of how to place a trade and how to set your limit and your stop order. We'll have a look at the current trades. We'll look at the SMA system chart and then the limit order. And during the week, I got questions from Colin, Ernest, and Isaac, which I'll explain, give you the answer that I gave to them. And we also have a very wonderful lady. Her name is Elizabeth. She's a former student of ours. She came on the course last year, and she's doing very, very well. So I'll give her the chance to also share some of the success tips with you, and also how to manage your trades and money management rules and effective trading plan. Welcome, Samoy. We went through most of this last week, but it's better to keep on refreshing your memories and then repeating, because repetition helps a lot. Okay, so how do you place a trade? You go to optionspay.com/52 week highs. Isaac, welcome. You pick a stock. So I went to the website, look at the 52-week high stocks, and I picked ARRS. And you check the SMA system, you check options chain, you check open interest over 100, and you choose at the money strike price. Okay, so I'm going to take you through the process of how we choose the stock. Okay, so optionspay.com/52 week highs. Okay, before I continue, can you type in yes if you can hear me? Otherwise, I might be talking without no one hearing me. Ernest knows that. Theodora, you can hear me, that's fine. Ernest, please check your speaker, please. Theodora can hear me fine. Colin can hear me, excellent, that's fine. Isaac, yes, you can hear me, yes, that's fine. Mario, can you hear me? Yes, Sarah, you can hear me, excellent, that's perfect. Loud and clear, Mario, well done, that's fine. So, Mr. Ernest, please check your speakers. I think your speakers might be low. Abby, welcome, thank you very much. Yes, you can hear me, excellent. Okay, that's perfect. Okay, so I go to 52-week highs and lows for US shares, and I'll click on new 52-week highs for US shares, and it will bring me to this page. Okay, just go through the symbols on the left hand side and pick the stocks and have a look at the SMA system. So ignore the stocks with the point, the dots, and then the slash. Okay, so you pick your stock. So in this case, I picked ARRS. I'll come to Options Express, type in ARRS in the search bar and press enter. Okay, so it will take me to the stock code detail of ARRS, and I'm looking for the chart. So chart is found under quick links on the left hand side, and we've already saved our SMA system. So just load up your SMA system and have a look at the chart. So at the moment, we're looking for the 200-day to be trending up, which is the orange line. The purple line, which is the 23-day SMA, should also be trending up. The blue line, 8-day SMA, should also be trending up. And you look at the last price bar. Okay, at the moment, it's just touching the blue line, which is excellent. Okay, so it means we are going to buy it cheap, and then hopefully we will hope that in 2 to 3 months it will rise up to make our profit. Okay, so that's an excellent entry signal for us. Okay, so our next step is to look at the options chain, and from the options chain, let's you decide whether you want to stay in the trade for 2 or 3 months. Okay, so we are almost in February, so we can say February, March, April, May. Okay, so our expiry date will be May, and I'll click on view chain. Okay, and from here I'm looking for the at the money strike price. At the money strike price is just this the on the call side, on the left hand side of the options chain. The last yellow background is at the money, and I'm looking for over 100 open interest. Okay, so at the moment the 25 strike price, we have 744 open interest. Okay, and we buy the ask and we sell the bid. So if I'm going to buy one contract, it will cost me $300. One option contract control 300 shares. So you always multiply the ask by 100. Okay, so which falls within our 2% risk management. Okay, so now all I need to do is I'll open up spreadsheet, get my diary out or anything that I'm comfortable with, and then type in the options code. So it's ARRS, and it's the May 2014 strike, and it's a 25 strike price at $3. Okay, so this is all I need to go to my virtual trade account, or if I have real money in my account, I'll go to trading and I'll input these details. Okay, so I'll go to Toolbox, virtual trading, launch virtual trade. Okay, and go to option under trade. I'll go to options. Okay, then I'll just type in the stock symbol ARRS, and automatically I'll get the options code up. So I need to change the date to May. It's a 25 strike price. Action is buy to open. Quantity is 1. And instead of market order, I'll use limit. And limit, the way we work out limit is you add the bid, which is $2.85 plus the ask, and divide it by 2. Okay, so if you have calculator available, just use calculator on your computer or laptop. Okay, so the ask is 2.85 plus 3, which is 5.85 divided by 2. Okay, so I can either shoot, I can try and pay $2.90 or $2.95, just a little bit closer to the ask price. So let me choose $2.95. Okay, so it's like Theodora, what's the symbol of the option? The symbol is A for Alpha, R for Romeo, another R for Romeo, and S for Sierra. ARRS. Okay, so the reason the limit price is like you're welcome, Theodora. The limit price is like for example, when you walk into a shop, you can haggle the price. So let's say you walk into a furniture shop, okay, a local furniture shop, and a chair costs, let's say, £20. You can say, okay, I'll pay £15 instead of 20. So the same way you can ask that the ask price is what the chair seller is asking for the price of the chair, which is $3 in this example. So as the buyer, I want to pay $2.95 to buy the chair. That's what the limit is. Okay, duration, go to cancelled, and then I'll just preview. Okay, so buy to open is very important that at this point you take your time to read from left to right. Action is buy to open, quantity is 1, ARRS May 14 25 call, contract size is 100, limit $2.95. okay, and I'll place my order. Sometimes if my order is accepted, it will be filled immediately. If not, I'll have to come back and look at the order and change it. Okay, so at the moment I ARRS, where is that? Yeah, at the moment here. Okay, so ARRS, it says open. Okay, it says open, so I'll leave it to when it's filled, or I'll keep on checking. If it's not filled, I'll just change the price that the $2.95 limit. Okay, so for example, just in case your order has been filled, then you can go ahead and place your stop limit order. Okay, the stop limit order. So let me quickly modify this. Let's get this order filled so I can show you how to place your stop limit order after getting the order filled. Okay, let me modify this one. So just imagine this order has been filled. Okay, so Abby is asking a question. Let me quickly attend to that in a moment. Abby is saying, why didn't you choose the ask price? Okay, Abby, the reason I didn't choose the ask price, I can choose the ask price and then I'll be filled immediately. Okay, but I want to buy cheap. That's why I didn't choose the ask price. Okay, you can choose the ask price, it's fine. You don't have to always add the bid and the ask and divide it by 2. You can just go ahead and just choose the ask price, which is a $3, which is fine. Okay, if you're happy with that, okay, you can do that. There's no right or wrong answer. So let's choose the limit. You're welcome, Abby. Ask $3 instead of $2.95. Let's see if it will be filled. Okay, so preview and place order. Let's have a look. Yep, you see immediately I'm filled at $3, which is fine. If you are comfortable paying $3 for the ask price, it's fine. Or if you are not comfortable, just choose between the bid and the ask divided by 2. But you have to keep on checking whether it has been filled. If not, you have to keep on changing the limit price. Okay, so fine. Let's stick with the ask price, which is fine for this webinar. Okay, so I'll go to my positions. So just imagine this order has been filled. So if it's filled, it will appear under my positions. Okay, positions is, you go to account and then positions. Okay, so ARRS is here. Okay, ARRS, let me scroll down a bit. Yeah, ARRS is here. Okay, so now I need to set my stop limit. So I click on trade. Okay, Theodora also asked a question. Let me quickly. Theodora, just remind you, the option we placed a limit on last week hasn't been accepted. What do we do? Okay, Theodora, if, like I said, if the limit hasn't, if the option hasn't been accepted, you have to go back again and change your limit. Okay, so go back and look at the difference between the ask and the bid and change the limit. Okay. Okay, Sarah, you're welcome. Excellent. Theodora, okay, is that okay, Theodora? You have to keep on checking. If you are not comfortable checking regularly, just stick with the ask price. Okay, the ask price immediately you'll be filled. But if you use the limit, the market order, you will be filled at any price that the market maker wants to fill you at. Okay, so if the limit order has been filled, just choose the ask price. Just use the ask price like we did in the example using the $3. Okay, so let me quickly continue. So from here, I'm setting my stop limit. So I'll go to market and then stop limit, and then I bought the option for $3, isn't it? So if, for example, I want to cap my losses at 50%, 3 divided by 2 is 1.5. So I'll put a stop 1.5 in the box, and my limit, if I want to make double my money back, I bought it for $3, I want to make $6 back. Okay, and the duration is good till cancelled, and then I'll preview and I'll just place my order. So sell to close 1A ARRS May 14 25 call at my stop, which is $1.50. So immediately I lose $1.50 or $150, I'll be closed out. Or if I reach $6 in profit, I'll be closed out, and then my profit will be automatically added to my balance. Okay, so I'll go ahead and now I'll place my order. Yep, that's fine. Excellent. Okay. As I said, please could you explain why the trade is at loss of 20? Okay, Isaac, the reason the trade is, you see, immediately you place a trade, it goes into a negative value. So let's say $15. Okay, the reason is ARRS today has lost 0.80 points today. That's why it's gone up, it's gone down in by -15. Okay, and guess what, we don't worry about these stocks going down during the couple of weeks that we place the trade, because we are in the trade for 2 to 3 months. Okay, so you just leave it, you just check that the SMA system there's no cross, and if you've made a profit of over $100, you just close your trade. So don't worry about all these losses, because we haven't, these are called paper losses, they are not real losses until we sell them and then they become real. Okay, so that's the reason that it went down by minus $15. Okay, but I'm not worried because I'm in this trade for 2 to 3 months. Okay, so I'm giving the stock time to rise up, to go up into my profit target, and then I will just sell it and make my profit. Okay. Okay. So our current trades, we currently the trades that we placed during the course, we have A. I'm still in trade with A. Yesterday I had a look. A was $100 in profit. I didn't close my trade, and I left it open. And today A is, I think, $20 or $30. Okay, and AZN, I closed AZ and I made a profit of $150. Okay, BDS still in trade. BRCD still in trade. DEPO closed it and made $194. BP still in trade. ACAS still in trade. Okay, so the limit order, how not to pay more. So I've gone through the limit order. Instead of using the market order to place trades, use the limit order instead. You add the bid and the ask and divide it by 2. Okay, so like Theodora asked, if the limit order hasn't been filled, what do I do? Okay, you have to go back and log in, modify your trade or your order, and then change the limit order, because as the stock price is going up or going down, the value is going up or going down, so does the limit, the bid and the ask. Okay, so you Vida, welcome. So you realize that sometimes the bid might be $1.30, okay, but you log in and the bid might be $1.50 and the ask might be $1.90. Okay, so it keeps on changing. If you are not comfortable logging in every now and then to just have a look at the limit, just use the ask price, like Abby suggested. Just use the ask price and immediately you'll be filled. Okay, so this is the question I received from Colin. He said, I entered my 50% loss level, and then what would I enter in the next box for a limit on profit as the stock is still negative? Okay, he says, I have stock CG that needs to have this loss level put in as it is losing value, just not sure on the profit setting. Okay, and this is my answer I gave to Colin. I said, for your limit level, you can set it at 1 to 2 risk reward ratio. So it's essentially, if you bought the option for example $2, you set your limit at $4. Okay, this means that you are risking $2 to make $4. Ms. Andy, welcome. Okay, so let me go back to the trading platform and take you through Colin's question. Okay, so Colin said, for example, he's placed a trade. Let me use IBCD. IBCD at the moment is down $60. Okay, he's placed a trade. Where does he put his stop limit? Okay, so I bought IBCP at $2.20. Okay, so $2.20. I'm just risking 50% on this trade, so I'll divide $2.20 by 2. Okay, so my stop will be $1.01. Okay, so to answer Colin's question, you place a trade immediately. You can't put the stop limit on a trade. You have to place the stop limit after placing the trade. Okay, so I'm using IBCP as an example. So Colin placed a trade which was CG and it went down in value. So where does he put his stop and its limit? Okay, so in order to know your stop, you divide your entry price by 2, which is, you are only risking 50% of your capital on that trade. So I bought it at $2.20, so I divided by 2, making it $1.10. Okay, and then I want to make make double my investment back. So I invested $2.20. I want to make $4.40 back. Okay, so I'll go to trade, and then from the price and the price, I'll just choose stop limit. Okay, remember I bought it for $2.20, so 50% of $2.20 is $1.10. Okay, and my limit, I want to make it double the investment. So $2.20 times 2 double is $4.40. Okay, 4.40, 4.40, and duration good till cancelled, and then I'll preview, and it says sell to close to IBCP May 14, $12.50 call. So my stop is $1.10. So immediately I lose $1.10, I'll be stopped out. And if I gain $4.40, I will be exited with a profit. And I'll just place my order. So this answers Colin's question. Okay. And our next question was from Ernest. Ernest asked, what is the relationship between the strike price and all the other prices, which is the ask, the bid, and the total gain or loss? Okay, and my answer was the strike price is very important because that's where you know how much you are paying when you buy an option, so which is the ask price, and how much you'll be paid when you sell an option, which is the bid price. Okay, and the total gain and the loss is the money you make, either you made a gain or a loss on a particular trade. And the strike price plays a major role in determining how much you pay for a particular option. So to go back and show you on the platform what I mean about the strike prices and the options and the percentage gain, let's use the same stock symbol ARRS, okay, and look at the options chain. Okay, so let's use the May 14 strike. Okay, so Ernest wanted to find out what is the relationship, how important the strike price. So the strike price are in the middle. If I choose out of the money strike price, the $30 strike price, it's going to affect my option. Okay, it's cheap, but it's very, very volatile, so I don't choose this. If I choose in the money, which is above the $25 strike price, from $17.50 to $22.50, I'm going to pay more for the option. So where you choose the strike price is very, very important, that's why we say at the money. So at the money is just in between the good and the bad. I'll say out of the money is bad, in the money is good, and it's in between those two. So that's why the strike price at the money strike price is very, very important. Okay. And he also said the percentage gain and the loss. So if I go to account and then positions, the percentage gain and loss is very, very important because that's where you know that you are losing money or you are making money. Okay, and it shows you whether you're in profit or you're in a loss. Profit is in green, losses are in red. Okay, so at the moment the percentage gain and the loss, if you see at this column, you have minus red, which means I'm losing money. And green means I'm making a profit. Okay, so that's the percentage gain and the loss. Okay, so Isaac also said after selecting a stock, he asked, after selecting the stock through the process, which is the charts, the SMA system, options chain, expiry date, at the money, then ask, when I place a trade, my ask price changes. For example, TEL was the ask was $2.75. Then after placing a trade, it changes to $2.60. OCLR was 0.75, but changes to 0.699. Please, can you explain why the changes? Okay, and my answer was the ask price will keep on changing based on the price of the individual stock, which is the underlying stock. Okay, and remember that a call option goes up when the underlying stock goes up in price and falls in price when the underlying stock goes down in price. That's why we give ourselves 2 to 3 months worth of time to allow the stock to do whatever it likes until we are in a profit or a loss, and then we sell it. Okay, so what it is saying is, for example, because this stock, which is AUDC, is today is minus 0.05 points down. Okay, when the stock rises up, let's say it goes up to $8, this ask or the change will also go up, so your ask price will also follow suit, and your bid price will also follow suit. So whatever the stock does is what the bid and the ask will also do. If it goes up, the bid will go up, the ask will go up. If it comes down, the bid will come down, the ask will come down. Okay, so that answers Isaac's question. Okay, so we have Elizabeth who came on the course last year, and she's a former successful student, and I wanted to share what's been working for her and how she's managing her trades, and the goods, the good, the bad, and what not to do, what to do to be successful. So Elizabeth, can you hear me? Excellent. Please, if you can hear Elizabeth loud and clear, can you type yes? Can you type yes in your in the box on the left hand side, please? If you can. Yes, Colin can hear Elizabeth, that's fine. Bandy can hear Elizabeth, yep. Vida can hear Elizabeth. Wesley, yep, excellent. Isaac, excellent. Thank you very much, guys. That's very good. That, you see, that's key. I liked it. You said you don't deviate from the strategy. The technical analysis, the exit. If it gives you a cross, you just get out, whether you're in profit or loss. You don't wait and see, because beginning traders want to know, I'm losing money. What if I stay on for a longer time? Maybe it will turn. It will never turn. If you see a cross or you're 50% down, just get out of the trade. And Liz also said she dedicates 10 minutes of her time every night before she sleeps to go through her trade, because, like she said, from the excerpt from Welcome to My Trading Room, it's a book, very, very good book. I recommend everybody download. I'll send an email to download the book. Okay, trading is a journey. You discover who you are really, and it's not a get rich quick scheme. You see, let all those people preaching that preach it. You see, last week we placed a trade, and immediately I think most people, most students, most of you've closed out a trade with a profit. Okay, that's how it works. Stick with the system, stick with the strategy. It works, and dedicate some time, like Liz is saying, is very, very important. And your booklet, you have to go through the booklet and read it, get the concepts in mind, so even when you sleep, you can still remember what to do. Liz does her research on YouTube, so that's what we call a student who's dedicated, a successful student. Even without me, and sometimes I might not be available. She'll go to YouTube, learn how to use trailing stop, which in the future I'll show you how to use. And she manages her risk by using the limit and the stop limit. Okay, so she's not emotionally attached to any one trade. And like trading is like life, you win some, you lose some. You lose some, just dust yourself and look at what you did wrong to lose that money. Meaning that was the SMA signal giving you a better entry. Okay, we are not looking for just a bend in the 8-day SMA, just a straightforward uptrend. Okay, the 8, the 23, and the 200. Okay, being a successful trader is a journey of self-discovery. Okay. And the primary goal of a successful trader is to accumulate equity. Healthy trading boils down to 2 questions you need to ask in every trade. What is my profit target, and how will I protect my capital? Okay. And a good trader accepts full responsibility for the outcome of every trade. You have to improve your trading plans and methods of money management. It will take time, and it will take discipline. Discipline is key. And your defense against self-destructiveness is discipline. You have to follow the trading rules in order to prevent self-sabotage. Okay, and discipline means following a trading system and learn to enter and exit in response to the predefined signals rather than jumping in and out at will. So our entry signal, 8 days should be up, 23 days should be up, 200 days should be up, all trending up. 8 days should be about 23, 23 should be about 200. It means doing the right thing, not the easy thing. And the first challenge on the road to disciplined trading involves setting up a record keeping system. Okay, good traders keep good records. They keep them not just for their accountant, but as tools of learning and discipline. So if you do not have good records, you cannot measure your performance, rate your progress, and learn from your mistakes. And those who do not learn from the past are doomed to repeat it. Okay, so that's why I stress to complete your trading diary every time you place a trade or you exit a trade. Okay, and traders fail because of impatience and lack of discipline. You see, we place a trade and sometimes it will stay in red for 2 weeks, 3 weeks, a month. Okay, we have to be disciplined and be patient. As long as there's no cross between the 8 and the 23, we are still in trade. We haven't lost anything. A good record sets you apart from the market crowd and put you on the road to success. And what losing traders do is they overtrade. Okay, they overtrade big positions for their accounts. So for example, let's say they have $10,000 account, they'll put on as many trades. Okay, you don't have to. 5 to 10 trades a month is fine. Okay, and they take profits too soon. And the reason I ask you to take the $100 profit is to help you know how to close a trade. Okay, so your profits you can leave it till it goes to 200, 300, based on what you are looking to achieve, based on your trading plan that you set out. And losing traders also they take losses too soon. So for example, I've set my loss to 50%. Anytime I lose 50%, I should be out. Somebody will say, okay, anytime I lose 10%, I'm out. 10% is too early. Okay, just leave it till 50%. If you risk 50%, leave it at 50%. Don't cut it short. Okay, and some people trade to escape, and they have victim mentality. They think nothing good in life will ever happen to them. Okay, be free, enjoy that trading is part of life. Whatever you do is going to reap big rewards for you. And some people are never happy. They have poor discipline. Like Liz rightly said, you have to be disciplined. Every time after work, she works full-time and she's a full-time mom as well. But gradually she's building this on the side to help her quit her day job, okay, which I'm going to help her do. So she's disciplined. Every night she goes and check 10 minutes a night is fine. Okay, it's fine. Stay disciplined and do research on the side. Okay, and we have a week from now till next week to have another webinar. Go on YouTube, research how to do trailing stop. So when you come on the webinar, you can even show me some new tricks you've learned. I'm also learning every day. Okay, so this is the trading plan I shared with you last week. Going into this trade because I want to make a profit on this stock or ETF going up in value. I'll only risk 2% of my trading capital. My profit target is $100, 20% or 30%. Okay, I will exit this trade when I reach my profit target or when there's a cross between the 8 and the 23-day SMA. Okay, and winners are those who stick with the written plans and know when to pull the trigger. Okay, so our next step is to monitor your current trades and look for exit signal, whether an SMA crossover percentage gain, 20 to 30% or 100% profits. Okay, so I'm ready for questions from anyone who's currently having challenges. Okay, so please, if you can type in your question on the left hand side for me, I'll be able to attend to that. Or are we all happy? Are we all comfortable placing trades and exiting and setting stop limits and choosing the limit price? If you are, please type in yes, so I know that everybody is on the right track. Or if you have a question, just type in and then I'll be able to answer. Okay, Abby says, did you say we can set more than one stop limit? Okay, let me Abby, when you say more than one stop limit, you mean on the same share? Okay, so Abby is asking, can you set more than one stop limit on a share? On a share, why not? But you need to cancel it first. So for example, if I want to set a stop limit on, let's say, A, okay, you see, whenever you set a stop limit on either of your stocks, you see a small star next to it. If you hover your mouse on the star, a window pops up and it says open order to close the position. So you have to click this open order. The order is a link. When you click open order, it will take you to your stop limits trades. Okay, so you look for that particular share you want to set a new stop limit on. So this is A. I'll look for A and then I'll cancel this current stop limit. So currently my stop limit is $2.25 and $5.40. So I cancel this cancel order, and then I can set a new stop limit on the same share. So yes, you can, but when you set your stop limit on a stock, there's no need to keep on changing it. Okay, determine your 50% stop loss and your profit gain, which is 1 to 2 risk reward ratio, and then stick with that. Okay, did they answer your question, Abby? Okay, Abby is asking, will you pay commissions on any changes? No, you don't pay commissions on any changes unless your options your option has been sold. Okay, so you can cancel and modify your stop order as many times as you want without paying commission. Okay, so you don't pay commission on any changes unless your stop is hit or your limit is also hit. You're welcome, Abby. Theodora is asking, please don't forget to tell me the symbol of the options we placed a stop limit on last week. Okay, Theodora, let me consult my trading diary. I can't remember offhand, but from my trading diary, I have AZN and BDX, BRCD, DEPO, BPACS. So I think we place a stop limit on A because I have a bid in my on my chart, $5.45. Don't worry about the bid. I just put it there. It starts with C. So okay. Can someone remind me which stock did we place a stop the limit order last week? Abby says it's CG. Theodora, is that correct? CG. No, she's saying no. I can't remember offhand. Let me see. Okay, let me check my the last week's webinar. See the slides. If you bear with me, Wesley's saying it's CCOI. Yes, Wesley, you are right. Well done. Thank you very much. Yes. Theodora is CCOI. Yes, well done. Wesley, thank you very much. Thank you. So CCOI. So what do you want me to address on CCOI? It's about changing the stop limit. Okay. So let me see if I still have position. CCOI. CCOI. Okay. I don't think I place a trade, but if you place a trade, the stop limit is basically the same thing. You go to trade, and then you change the market to stop limit and change it from there. Okay. Theodora, is that okay, or should I go through it once again? How to change the stop limit? Yes, we haven't bought it yet. No. I use CCOI as an example of showing people how to look at the chart. We made an offer. Let me see. Theodora say we made an offer on CCOI. Okay, let me check my overview. CCOI. No, I don't have CCOI in mind. If you made an offer, that's fine, but I didn't place a trade. It was just an example of how to look for the stock how to set the limit, how to set the stop limit, and so forth. So it wasn't a stop for us to place a trade. Actually, I just picked it randomly to show how to do it. Okay, so Ernest is also asking a question. When setting the limit, do you always have to set two limits, that is the lower and an upper limit? Okay, yes, Ernest, yes, the lower limit is your stop, and the upper limit is your profit target. Okay, so yes, you set the lower limit as your stop and your profit target as your limit. Okay. Okay, Wesley, thank you very much. Wesley saying it was only as an example, as I have in my notes. Yes. Ernest, welcome. You're welcome. So we use CCOR as an example. It wasn't for us to place a trade on. Okay. So Vida is asking, I wanted to exit TRN with a profit of $190, but I was instructed to check position. Please explain. Okay, Vida, did you put a stop limit on TRN? Yes. Okay. That's fine. If you put a stop limit on TRN, you always get this small star next to your stock. Okay. So if you go to positions, okay. So all the stock I have stop limit on. You see, if you hover your mouse on the small star next to the options code, a pop-up window will pop up. So you need to go to that other page and cancel it first before you can sell it. Okay. So if I click on the other link next to AUDC, it will take me to the other page. So I have to go through the symbol and look for AUDC. So AUDC is at the top here. So likewise, you see TRN here. You scroll down to the far right and then you click cancel. Okay, so when you click cancel, it will take you to this page and then you just click cancel order. So after canceling the order, you realize that there's no star next to your symbol. Okay, so Vida, until you cancel the order by clicking on that order link from the pop-up menu, you can't sell it. So that's why they ask you to check your position. Is that okay, Vida? Vida, that's fine. Vida, thanks. Okay, Wesley, sleep well, have a good weekend. Okay, bye. Okay, Wesley, well done. Bye bye. Bandy, can we get a video record of? Yes, Bandy, yes, I'll post the recording by the weekend and I'll send you the link. Vida, if we close a trade, it still shows on the positions. Why? Vida, I'm not sure. If the trade is closed, it shouldn't show on your position at all. Let me go to. Let me quickly show you. Okay, so if you close a trade, it shouldn't show under position. So it should be off your positions page. It shouldn't show. So which trade is still showing by that? Okay. Andy is also asking, BP's graph is almost crossing. Is it a good time to exit my position? Okay, so let me have a look at BP. BP, let's see the chart. So okay, we entered BP. Okay, we entered BP at $1.20. Okay, so $1.20. If the chart is almost crossing, if there's no cross, you don't need to exit unless you've lost 50% of BP. So we entered it at $1.20 divided by 2, and we bought how many contracts? 4. So I multiply this by 400. So unless I lose 200 and $40 if I go to my positions, and if BP is not down $240, I'll leave it. Okay, so BP at the moment is down only $80. Okay, so it's not I haven't hit my 50% stop loss, so I'll still leave it until I get as a good cross from BP, from the SMA system. Great. I'm trying to load, but it's not showing. Our next webinar will be next week, the 30th of January, same time, 8 p.m. We will look at our current trades and any questions you have. Okay. Okay, Vida is asking a question. Colin, bye-bye. Thank you very much for attending. Vida, CALD 140 profit, GW 140 gains. Hey, yes. So, Vida, have you closed all your trades for CALD and GLW? If you have, well done. Okay, if you have, well done. We still have an open position. Okay, A is yesterday was up $100, today is down $90. Okay, so we only have $10. Okay, Vida, yes, well done. If you have closed your trade, Theodora, well done, excellent. Well done, guys. You are doing an excellent job. Okay, well done, and keep it up. And if you have any questions at all, please do well to email me so I can feature your question in our next webinar to help other people. Theodora, you're welcome. Thank you very much. I hope the format of the webinar is good. You are learning as we go along. It's going to be the same format. I'll be repeating myself a lot, but that's how I do it, because the more repetition I do, the more understanding you get. Okay, Mr. Moyo, thank you very much for attending. I'll see you next week. Theodora, thank you very much. Sarah, thank you. Liz, thank you very much for your inspirational tips. Abby, thank you very much. Andy, Bandy, Ernest, Isaac, Colin, and Wesley, thank you very, very much. Isaac, thank you too. Mr. Andy, you are welcome. Thank you very, very much for coming onto the webinar. Vida, thank you. I'll post the video recording on the website, and then I'll send you the link and email you the link to download the book as well. Sarah, good night. Thank you very much. Sarah, I hope you are beginning to understand how we select the stock and how we place a trade and close a trade. Ernest, thank you very much. My regards to your wife. Sarah, that's excellent. Well done. You are doing very, very well. Okay. Thank you very, very much. Have a blessed evening. Take care. Bye bye.